Jairam Sampath, Whole-Time Director and CFO at Kaynes Technologies. Jairam, good afternoon and welcome to the show, and a pleasure to speak to you at NDTV Profit as always. My first question coming to you is, all of us have seen how the first quarter has been. The market has reacted accordingly in terms of the stock price as well. What the street is now interested in is this kind of performance expected to continue in the coming quarters, and what is it that will lead to the kind of guidance that you've indicated for FY26?
Absolutely. Thank you for having me here. Always a pleasure to talk to you here. So basically, there are two parts to this guidance. One is the revenue, the other is the profitability improvement. So we think that we will achieve the revenue guidance that we have given for the whole year, about 4,500 crores. So typically during the year, the sales increase every month from April onwards. Every quarter the sales increase, and so what is really distinctive this quarter is that we have been able to get to a higher level of profitability, and that has been across the board in all the various sectors that we have been there, driven primarily by the first quarter by the gross margins that we get. And of course, going forward, operating leverages will also kick in. So we are quite confident that both the trends, the numbers that we have talked about in terms of revenue numbers for the whole year and on a consolidated basis exceeding about 4,500 crores, plus the EBITDA we had talked about 15.6%. I think it will be north of that number at minimum. So, right, and the evidence for this is that there's been a healthy growth in our order books and a lot of new client acquisitions, which we really can't talk about in names, but we've had some significant client acquisitions. And these are all in different areas, including industrial, automotive, railways, then also aerospace, etc. And also we have made some small investments in the area of outer space and defense, etc., to further our ability to service the booming sector of high-tech electronics, which is in the service of the nation too. So all in all, I see this year as a turning point in terms of putting it in a different trajectory, both profitability-wise and sales-wise, and we stand by the numbers that we have talked about.
Good afternoon, Mr. Sampath. It's Puneet this side, and thanks so much for joining in. So, since you said you're standing by the numbers, so I'm guessing you're reaffirming your guidance of about 4,500 crores in terms of revenue. And I think last year you were roughly about 2,800 crores. So that's good to know. And just a follow-up on quarter one, because we've seen a very strong growth in terms of margins, but revenue profile was slightly muted compared to what we were building in. So is that some of the key orders or some executions that have moved to quarter two? Is that what's happened? And if you could just give some color on that.
No, I think it's just that the April numbers typically are muted. So it's the impact of that particular number, and June has picked up. So we are quite confident now. Of course, we have seen the July numbers too. And once it's audited, we'll present the first half year. So there is no specific reason for any, let's say, specific reduction in sales or anything of that kind. So we are also a diversified portfolio. So we do adjust our portfolio a little bit. Supposing a particular industry does not do well, then we pull in orders from the other side. So that exercise takes a bit of time. I'm sure you can see in the markets different. We serve automotive, we serve industrial, electric vehicles, railways, defense, auto space, aerospace, etc., medical electronics, and also IT, IoT. So specific sector-wise, there could be some, let's say, headwinds that people can see. And as you know, the first quarter has been a little iffy from the global cues and from the from the perspective of what we call the geopolitical muscling around, right? So we have overcome all that and still a decent number in our opinion. And in the second quarter, we'll make up. So far by the year of, by the September quarter, no, we'll probably be on par in terms of revenue growth too. Of course, we will keep the growth in profitability intact too. So the good news here is that we started on a good foot as far as profitability is concerned. So the EBITDA numbers have grown by about 69%, which is more than the guidance that we had given. So I think going forward, we would probably have even better sales than what we had predicted.
Mr. Sampath, because we've seen in the last year as well, you needed about 900 to 1,000 crores of revenue in Q4 to meet the last year's guidance, and you did that. So you were about at 572 crores in the September quarter last year. So should we expect a substantial growth from that number?
Yeah, I think if I were to hazard a guess, it would be excess of about 1,000 crores in the second quarter. So yeah, so we would so this makeup happens. See, the customer orders flow and the shipment don't go by just the quarterly profile alone. So it's a continuous process. So we think that that will pick up there, and we would see a significant growth over that number last September.
Jairam, what is the order book looking like, and for how many years are you seeing visibility on that front in terms of revenues? How much will flow in out of it in FY26 and how much in FY27?
So typically the order book is worth about 1.5 years, typically on a rolling 12-month period basis. And we see a lot of, so there is two parts of the order book. One, what is there in our system, which is what we declare. These are the orders confirmed by customers, and then they are ready for execution over up to about 5 years time frame. But most of the orders get executed in about 1.5 years time frame. The other part of the order book is also new businesses or new awards of businesses that we have won from new customers. So that would be something like $40-50 million worth of businesses, which are probably not part of this particular order book. Consider that as a seed, right? So that also grows. So firstly, customers would give you a pilot order, and then they back it up with regular production orders and so on. So I think the order book growth will continue in the medium term, little faster than probably the growth in sales itself. So that we are able to reach the number of FY28 1 billion that we had committed, and maybe exceed that too.
Mr. Sampath, the other key update that you had also mentioned in your conference call was about the OSAT and the PCB facility, both being in quite an advanced stage, essentially from the last quarter. So what is the current timeline that you're anticipating? Because you rightly said $1 billion in terms of revenue, and some portion of that was from OSAT. Do you expect that the OSAT business will be operational by Q4 of this year, and any outlook on the PCB business as well?
Very much, very much. So as far as OSAT is concerned, we had earlier had 2 anchor clients. Now we have added a third one, and the machines everything has been ordered, and hopefully you will start seeing the production, the pilot production happening sometime in Q3 and commercial shipments happening in Q4. So we are quite confident that this year we will post whatever number we put, a modest 100 crore target, and I think that certainly should be possible. As far as PC board is concerned, will be probably we also have a good kind of client traction, and we would probably start shipping from April of next year, first quarter. So we are on schedule as far as these are concerned, and probably in FY27 you will see a bulk of the capacity being utilized, and then significant amount of business being done. So by FY28, earlier we had talked about 2,000 crores between these two businesses. Maybe we'll exceed that too.
Okay. Jairam, when it comes to expansion in the global markets, you have looked at acquisitions. You're talking about Digicom, you're talking about August Electronics in Canada. This means that, yes, the exposure with regards to exports is going to increase in terms of total revenues. Where are you seeing it in FY26? And if US markets is going to be a key driver as well from here on, how are you seeing the impact of tariffs?
Yeah, so that's the trick here. So if you make it in India and sell it to US, they will impose tariff. But if you make it in US and sell it in the US, there's no tariff. So that really is the thing that we guessed earlier on, and when we talked to people and so on, we said that we will invest in US for manufacturing facilities in the high-tech area, so that we don't see too much of impact of these tariffs. So the tariffs are applicable if you manufacture outside the country and then bring it into the US. But if you manufacture inside the US, they don't care. So from that perspective, I think it's a good thing that our strategy of acquiring 2 companies, and maybe some more will acquire during this year, so that we have a critical mass of companies, delivering value in areas which are complementary to our existing areas, sitting inside US. So yeah, tariff not too much. But there are some exports that we do. Obviously, the semicon is one major export, but generally semicon, etc., is kept outside the tariff barriers by all countries, because otherwise it will completely make everything topsy-turvy. And also not a huge number. They are more running for other more value-added uh, products and services, right? So as far as semicon exports are concerned, we don't see any problem. The third aspect that you must see in exports is that what is the other choice that global OEMs have? If supposing they put equal tariff on India and Malaysia, for instance, or India and Thailand, for instance, or India and any other country for that matter, who are also sources for these people, in which case it gets neutralized. It's just that those companies would drive a hard bargain on pricing, for which we are prepared. We'll do some cost reductions and so on. So yeah, so that's the reality bite on the tariff business. I don't think it will significantly impact. If at all anything, it will hasten our ability to do things in the US. We'll probably acquire more companies there and then increase the business. So distinguishing between export and geography business, we would rather do factory business inside. We set a factory in the US and then do businesses there. There are many such good opportunities available. And of course, semicon and PC board exports will continue. And then there are some other exports that happen, critical exports, which are by the nature of, let's say, consumption domestically, but just goes outside and comes back. So they are neutralized, right?
Right.
So if there are reciprocal tariffs, so we don't see in actual end-to-end calculation. I don't think that's a driving factor to the business.
Right. Mr. Sampath, just the last couple of questions. You've seen a very strong EBITDA margin in this particular quarter, and you expect that to sustain. But largely your new ventures like OSAT and PCB will come in Q4 and then subsequently in FY27. So what's actually led the margin to grow in this particular quarter, and is that largely because of the industrial segment? And just one more on ROCE and ROE. How do you see that trajectory with the current investments? Will the new ventures also have a subsequent positive impact on these two numbers?
Yeah. So as far as the EBITDA number is concerned, obviously it's driven by, there are different blends that drive it. The first blend is whether different companies that we work with, India geography, let's say North America geography, etc. The second blend is how much of automotive, how much of EV, how much of industrial. So obviously, you rightly pointed out, industrial has been a tad higher than usual. So we do have good products there, and fairly good EBITDA. The numbers are being shown there. And we think that will continue. Just to tell you honestly, every sector we have had improvement in gross margins. This is on the back of cost reduction efforts that we have undertaken over the last 2 years. So that is also driving. So the EBITDA is driven by blend, then EBITDA is driven by improvement in gross margins, and third EBITDA third portion of improvement is coming because of operating leverage as you sell more and more in each quarter. So the denominator becomes smaller, and so the numerator increases, profits increase, and then you turn out better EBITDA. So you will have EBITDA due to gross margins, due to blend of different products, and also due to improvement in operating leverage.
That's
why
interesting.
For the next 2-3 years, you will see an upward movement. Yeah.
Absolutely. And valuations, Jairam, are very expensive. So I think investors are now watching out as to when Kaynes will get to that 25-30% ROE bracket as well. And that's what the street is watching out for from here on. But thank you so much.
FY26, FY27, yes.
Thank you so much. Thank you for joining in.